Hello everyone. Thank you for being here. I'm Bogdan Stoyan. I'm representing Sibling in this in tonight's webinar together with Péter Oszkó. He's the founder of O3 Partners, the most recent company that's present onto and live onto our crowdfunding platform. I'm not going to prolong this way too much because I know that there are a lot of people into the audience, and I'd like to have the chance to address questions and everything else. But the way the webinar is going to work, so after this brief introduction, I'm going to pass it towards Peter. He's going to take it on, make a brief presentation about O3 Partners, give you some key info about the round, and also about the company and what it's been doing up until today. And afterwards, we're gonna address all the questions that are going to be asked in the chat. Feel free to do it even during our speeches, and we'll be taking them on after the first part of the webinar. Without further ado, Peter, thank you so much for being here with us tonight. I'm gonna pass it on towards you. Please take it over and let's start. Thank you.
Thank you, Bogdan. Thank you very much, and thank you for the occasion. We really appreciate the common work together with Sibling. So far, we think this campaign was pretty successful. We have achieved already commitments over €1 million, and we see that you do your best to connect us with as many investors as possible. So thank you for that. Before I start my presentation and my introduction, I just need to say that I'm sorry. I just got sick yesterday, so my voice is not the best one. So if it disappears from time to time, sorry for that. But we are online, so I won't infect anyone. I just try to share as many information as possible. Let me start with a personal introduction, because I think in all cases where we are talking about investments and business and trust for committing investment into other companies, it's very important who are running the business. As to me, I'm Péter Oszkó. I am the founder of O3 Partners. I do that type of business, meaning private equity and venture capital type of investments for more than 15 years now. But that wasn't always the case. I spent the first 15 years of my career in the multinational advisory business, mainly with Big Four companies. So I worked for KPMG, then for Deloitte. I was managing partner of Deloitte in Hungary, and I led some businesses in former Yugoslav countries as well, till 2009, when the global financial crisis hit first the world. At that time, I took an invitation to become a technocrat finance minister of Hungary for one definite year. It was a crisis management exercise. I was never a party politician. I was never a party member. I was just taking this job to do a typical crisis management before the general elections of 2010. Then after that, I decided to somehow change my career path and started to get to know the venture capital and private equity type of investments. I spent 4 years with OTP Group, which is a large regional financial institution headquartered in Hungary. That's where I built up the venture capital business line. And then after 4 years, I decided to become independent and start my own firm and launch the first fund that we managed on our own. We had an angel fund between 2015 and 2020. That was a pretty successful early stage angel fund with a 4x multiple that we paid back to the investors. And after that, we decided that as we were quite popular in the local and regional markets, we just extended our activity, listed our company on the Budapest Stock Exchange Extend market, which is still not the standard market, not the regulated market, but the so-called multilateral trading platform. And there we've already invited institutional investors beside high net worth individual type of investors as well. And that's where we started our career on the listed markets. Initially, we still invested directly into portfolio companies, but more and more into secondary investments as well, meaning that we didn't invest into founders' businesses from the beginning, but we just took over portfolios and portfolio companies of other investors, because we realized that that early stage is a risky type of business. Secondary is a more balanced business with still very attractive return potential. We did even better return on secondaries than initially on our angel fund between 2015 and 2020. And after 2022, we realized that the market is changing, high interest, lower growth, less funding, more pressure on the private equity and VC type of investments. And as we were talking to competitors, to other investor groups anyway, we just realized that that's the time to consolidate the market. It's not, there is opportunity not only to invest into promising early stage companies or invest only into secondary portfolio companies, but we can invest into other asset managers as well, other so-called GPs, general partners who are managing other funds. So at that time, we started the so-called GP stake investor activity, which is currently our main strategy. So let me share my presentation. That's where I will present what we are doing now. I just wanted to give a preliminary information who I am and how we get to the activity that we are performing currently. So just let me know whether you see the presentation properly.
Yes, we can see it. Thank you.
Okay. So I just need to see how I can move with the presentation because it's still not. Yeah, okay, good. So we call our strategy to be a GP stake investor. I tried to explain how we got there, meaning that we are participating into the private equity and venture capital investment industry. And we participate in the return potential of that industry, but we try to do it in a balanced way, having positive cash flow, participating into the management fees, and balancing the risk of that type of investments. It means that we are investing into fund managers, into funds. That's how we build up our portfolio. And those fund managers and funds are investing into specific portfolio companies. And we have a family of funds which are not competing with each other, but which are more in synergy with each other. We have incubator, early stage, later stage, growth capital type of managed funds, which means that we can support each other's portfolio and we can really balance the risk. The other characteristic of our group that it's a listed share, but still listed on a multilateral trading platform, which means that there is still a certain level of liquidity, there is still a certain level of trading, but it is not the fully open standard regulated market. There are some institutional investors who can invest into a company, but not all of them. Pension funds are, for instance, still not allowed. They will allowed to invest into the company when we are on the standard market, on the regulated market. Other type of asset managers can already invest. We have a lot of high net worth individual type of investors, and we try to increase our retail basis as well. We try to invite as many retail investors as possible. But formally, the regulation applicable to listed entities are already applicable to us. So that's a quite transparent structure. We report publicly all of our activities, all of our results. We declare all of our important transactions. So it's a quite transparent operation. You will see we have quite attractive numbers. The only number we are not satisfied with is the trading volume, the daily liquidity of the shares. The main reason why it is still I would say, a semi-liquid stock is that our initial investors were rather high net worth individuals or institutional investors who are not trading on a daily basis with the shares, but they are investing and they are happy with the dividend payments, but they rather keep the shares. This is why our next step, the main strategy is to increase the number of retail investors who are normally trading more often, more permanently with the shares. This is why we are doing the current crowdfunding as well, and this is why we target the standard market with a planned IPO in the future. We do the standard market. We have already started to prepare the standard market IPO, so it will happen during September or October. This is the second half of this year, but this is already under preparation. And then later on, we would also target a cross listing on a Western European stock exchange as well, also to increase the capitalization and the liquidity of the shares. And as I explained, our business model is to invest either fully or partially into funds and fund managers, and to participate in the industry's return potential through that structure. That's how we look like on the map. We've done already several acquisitions. We have acquired a strategic minority stake in 3TS Capital Partners and a similar stake in Catalyst Advisory. And as a result, we are covering quite a large number of cities and regions within Europe. You can see that we are quite dominant in Central Eastern Europe. So we have offices in Bucharest, Budapest, Bratislava, Warsaw, Vienna. We have our headquarters in the Netherlands. We are more and more active in the Benelux countries as well, meaning Luxembourg and the Netherlands as well. And we have some roots on the Nordic market. So we have some Scandinavian activities as well. Currently, the asset managed is a bit more than 300 million euro. So it's already a visible size of a VC and private equity group in the Central Eastern European region. We have an ambition of growing that quite quickly through acquisitions and through organic growth, and we really want to grow into being a European competitor on that market. Let's just discuss briefly what is our operating model. So we are keeping GP participations and co-GP participations. We have fully owned GPs, and we have GPs where we are strategic minority shareholders, and the asset manager partners are the majority shareholders. Certain activities are centralized at the holding level. It's more fund operations, back office, IT infrastructure, and similar type of activities, which means a certain proportion of the management fees are also coming to the holding. And then being a listed entity means that we always have a kind of liquidity, and we always have a kind of access for necessary funding for the operations and for the acquisitions and for the establishment of new funds or new GPs. And at the same time, with that structure, we give attractive returns to the investors as well. Just to explain that in terms of the revenues, these are the four types of revenues the holding company, all three partners, have. As I explained, we provide continuous services to the GPs, to the specific asset managers, and as a result of those services, we of course receive proper management fees on those services. It varies GP by GP what are the specific services and what is the amount of the management fees, but this is a continuous revenue for the holding, covering all the operating costs, and that's the basis of why we can say that the operation, unlike to direct VC or private equity fund investments, investors in that operation can benefit of a continuous cash positive type of operation and results. Participating into management fees and sharing with shareholders mean that they are benefiting of the return potential of the industry, but they are somehow balancing the risks with the participation of that type of revenue. Of course, we have carried interest participation as well, to the extent of our participation into the GPs. So if we have a 20% participation, then we have a 20% carried interest share. as we are partnered by the participation into the GPs. We are also investing into the funds as partners in the GPs. So we have fund investments, and on the fund investments, we have the return of the fund as well. And we have dividend income from the participations as well. So it means that there is a stable, continuous cash flow positive operation. And there are, from time to time, casual occasions when we can have the high return of the industry. And unlike to a specific fund investment, when you invest money and then if you are lucky, then 10 years later you really receive something back with a significant return. We are managing various funds with various vintages, which means that it's not only by 10 years, but by every second year that we have that type of carried interest income and return on the fund investments as well. These are all existing numbers and this year's plan. This also shows somewhat the change in the strategy, because in 2023 we were still investing directly mostly into secondary portfolios. And in 2024, that was the year when we basically changed the strategy, stopped investing directly into tech companies, and we started to invest into GPs. We closed the first GP acquisition in 2025. So 24-25 is the year of changing this strategy. You can see that we were successful with the direct investments as well. So 2023 was also a profitable year, but with smaller revenues. These were more exit type of revenues. 24, we stopped realizing the exit revenues, but we haven't started to realize the revenue from the GP stake investment. We still had an accumulated profit from the previous activity, and we decided to be fair with the previous investors to distribute that to the existing shareholders. And then we started the GP stake investment activity. And as you can see from the numbers, it doesn't seem to be a bad business. In 2025, we've already realized 3.5 million euro as a profit, and the revenues have increased as well. I still consider this year as a temporary year. So we just started to build up the management fee revenue basis, but we stopped exiting from previous portfolio companies and realizing service fees or management fees from these previous portfolio companies. So if you go into the details, you will see that a larger part of that profit still comes from the portfolio value and not from the specific management fee revenues. But the way we go forward, there will be more and more management fee and less portfolio revaluation. But even the portfolio revaluation shows that the strategy is right, because we have a positive revaluation difference, because under current market circumstances, we can buy very cheaply. So under the current market, even the secondary portfolio is quite valuable, because we could buy cheaply secondary portfolio companies, and the GP acquisitions are also valued very preferably. So we can buy GPs or GP stakes at an attractive valuation, and as we can add value, we can help them launching new funds, growing more quickly. Then, of course, the value of those type of stakes also increase. And of course, they can pay more and more management fee. And then this year's plan is a slight increase revenue in the revenues and the increase in the profitability as well. But the condition of that, of course, is that we can increase the volume of asset under management. This is partly already in progress because we are anyway establishing new funds. The establishment of new funds doesn't necessarily require significant funding to all three partners. A certain level of funding, yes, because we need to fund GP commitments and some operational costs. And if we can have further funding for all three partners, then it means that we can even execute further acquisitions that are under negotiation. Yeah, and you can see on the slide that last year's number were pretty attractive because besides paying dividends to the shareholders, even there was a significant stock price rise, about 30%. It was even 38%. So the overall shareholder return was 50%. I don't want to say that we will have every year 50% shareholder return. Of course, it wouldn't be possible. We still want to keep the level of profitability, meaning that we would like to keep the profit per share around 1 euro per share, sorry. We decided not to pay dividend this year because we really have a good growth opportunities, even for acquisitions and for new fund establishment. And as you can see, it can quickly increase the revenue basis and the profits. But still, it means that the profit per share could increase from 2025 to 2026. It doesn't mean that we always have that over 50% total shareholder return. But what we want to explain that we try to keep a standard level of profitability between 8 to 12%. And if we have a good year, because we close a fund very successfully, or we have a very significant carried interest, then at that time the profitability can go up, which we can use for dividend payment or to share buyback or for any other type of transactions. That's how we look like currently. I mentioned already Catalyst Advisory and 3TS Capital Partners, which are part of the portfolio. Both are managing 2 funds. And we also have an 100% subsidiary, which is an incubator company. It means that those 3 asset managers are covering the VC investment segment from the beginning to the growth stage, to the later stage investments as well. And that's the family which covers the 300 million euro asset under management. And we are in the process of establishing a green energy fund. And we want to continue the secondary investments activity because we were quite successful in that segment as well. So we are also establishing a VC secondary fund to continue that activity. These are those 2 planned divisions or fund activities which can already increase the asset under management to 500 million. These are summarizing the future growth and acquisition plans. I explained the green energy business line and the secondary investment activities. We also have new GP targets, and for those GP targets, we would like to get further funding from potential investors. We are negotiating GP targets within the region in different segments, from private credit to impact type of investments as well. And we are also negotiating potential GP targets outside the region. So we would like to start covering not only Central Eastern Europe, but some other regions where we are also quite active. And then, yes, besides the secondary investment and the green energy business line, we would like to start new fund establishments as well, or existing fund managers are also planning future potential new funds. There is a quick summary on that. You see the green energy fund, the secondary fund. Catalyst is also planning to establish a new early stage fund. It is already in progress, and they'd like to cover a wider region and manage a larger fund size. And of course, 3TS is also planning their new growth equity fund to be established in the coming years. Only by that even without further acquisitions, you can see that how quickly we can grow the asset under management, which is the key because management fees are calculated on the basis of the asset under management. And then with the new acquisitions that we are negotiating, this growth can even be accelerated more. This is the roadmap we are planning, or we have already performed, and we are planning further. We had some funding rounds already in the past year. That was for the for the closed acquisition, 3TS Capital Partners and Catalyst Advisory. We are now opening the equity crowdfunding, the purpose of which is to give a certain level of liquidity for the new fund establishments. And if the equity crowdfunding is even more successful, then we can also potentially perform new acquisitions. This is for the first half of the year, so we will close it in June. For Q3, we are planning the formal IPO and entering the standard market on the Budapest Stock Exchange. And in or after 2027, we would like to have more activities outside of the region, more investment targets, more potential acquisitions. And in parallel with that, we would like to do a cross-listing on the Euronext Amsterdam. With the currently planned crowdfunding and the IPO, we would like to increase already our market cap. Our market capitalization is currently about 30 million. So with a 30 million market cap holding company, we are managing 300 million. That's the minimum ratio. But what is interesting that we increased the market cap to 40. By that increase, we have a chance to double already the asset under management. So this is why we think that, but step by step, we would like to increase market cap, and we would like to execute similar acquisitions, which can increase more exponentially the revenues, the profitability, and the asset under management. The equity crowdfunding is ongoing now. The maximum is 5 million. We are now over 1 million. With 1 million, we are fine already. We can perform what we have planned as a basic plan, establishing the new fund that I've mentioned, secondary investment fund and green energy fund. If it goes even better, then we can start perhaps executing some further acquisitions. We have some new targets which are very close. We have already signed non-binding term sheets, but then more funding we have, more acquisition we can execute. And then to sum up, these are the terms of the current equity crowdfunding. Although I know that in the practice of Seedlink, it's more typical that you invest through a nominee structure because that's how you can manage to invest into an early stage startup. But in our case, this is different. We are managing the whole process and issuing the ordinary shares, so you can get the same shares which are already traded on the Budapest Stock Exchange extend market. So you get directly the common shares of all three partners. It's a cash capital increase, as I said, up to 5 million euro. It will be closed in June, running on Seedlink, and the pricing is 8.1. There are already some level of liquidity and trading in the past weeks, but you can see that the price range increased a bit. We still calculated 8.5 as the basis pricing, where we said that we are giving a 5% discount. But currently the pricing is 8.7, which was the last closing price. And in the past days, it also went up to 9.1, 9.3. So that's the minimum discount we are giving, I would say, the 5%. But if you just look at the past weeks, the trading price is even higher. So the 8.1 pricing is even more attractive. And yes, you can see what are the use of funds, but I have explained that already. So that's the short summary. I'm happy to answer any question if you have, and I'm happy that there are so many participants being curious about our plans. Thank you very much.
Thank you so much, Peter. And also thank you so much for mentioning the fact that the investment is a direct into all three partners, is not done through a vehicle. I was just about to mention that after your presentation. We already have two questions in the live chat, which I'm going to address right now. And also in the last week, I've been in touch with a couple of investors that aren't able to be here today. So I have a list of questions as well that I will be asking after we get through the ones received in the chat. The first one is O3 invests in fund managers rather than directly in startups. What type of characteristics do you look for in a fund manager that indicate they can consistently generate returns across multiple fund cycles?
Yeah, of course, we look at the track record of the fund manager first, meaning what type of revenues or returns they have in previous funds, or how their current portfolio look like, because that's the most important question for the LPs, for the potential investors. And to be very honest, under current market circumstances, what we see that successful fund managers can keep their LPs with the conditions that they have a proper performance. It's very difficult to invite new LPs, totally new investors into new funds. All LPs are rather investing into the existing fund managers and they are supporting the existing contacts. So if a fund manager is performing well, they can expect that they can convince their existing LPs into investing into the next fund. If they don't, then that's an issue. And our main risk, that's the very simple main risk when we invest into GPs, whether the GP will be able to establish a new fund. That's mainly the only thing we need to evaluate, because it's very easy to calculate the management fee and the costs and the profitability and the potential share of the management fees. What is the risk of that business, whether a fund manager is able to establish a new fund? This is why we see how much fund they've managed, what's the vintages, whether they still have an active fund or not, and what are the chances of establishing a new fund. But what is the benefit of this business model, that as we are investing into different GPs with different investor network, the whole group can simply extend the next network of investors and generate new investor contact by acquiring new GP stakes. And then we can change the contacts between each other, because of course a financial institution can invest into an early stage fund and into a growth capital and into a green energy parallelly, so they are not competing with each other. And while I said it's very difficult to convince new LPs to enter into a fund, but when they become an LP in a family, then it's much easier to sell them the new funds of all the GPs within the family. So this is what we have selected as a strategy when the market is not really growing in terms of number of the LPs, that we are acquiring fund managers where we see the potential of launching a new fund, and we can add to their fund new LPs from the family that we are managing. So if an early stage fund manager have a capacity of managing a 50 million euro fund and have a potential of launching a new 50 million fund, that's already a good business for us, and we can value it properly, and we can help them to launch, to grow their next fund to 100 million perhaps, and by that we already benefit from a value increase. I don't want to complicate too much, but that's the basic answer to that question.
Understood. Thank you. Thank you for the answer. I'm going to move to the next one. So, the roadmap targets Euronext Amsterdam in 2027 or after. What are the specific regulatory and financial thresholds that need to be met for that listing? And is there a fallback plan if those conditions aren't achieved?
What is interesting that as we are already a Dutch headquartered company, our current Budapest standard market entry is already subject to the authorization of the Dutch Financial Supervisory Authority. So we are already in negotiation with AFM, the Dutch Supervisory Authority, for the authorization of our Budapest standard market entry. And these are harmonized rules. So from the time we are already on the standard market of the Budapest Stock Exchange, we have already complied with all the technical requirements of entering the Euronext Amsterdam. So we could simply do a technical cross-listing without even raising new funds. We could just list the stocks on the Amsterdam Stock Exchange. Perhaps it wouldn't be that meaningful because we need to have active investors on that market as well in order to have certain liquidity. So the plan is rather identifying potential acquisition targets on that market, presenting the business case to the investors active on that market, and then doing the cross-listing on the Amsterdam Stock Exchange. But there is no new technical requirement that we cannot meet. It's more business requirement that we should achieve, and the most important business requirement that we should have proper, interesting acquisition targets or growth opportunities in order to be able to convince the investors active on that market as well.
Got it. Thank you so much. We received another question from the audience. So in the funds you have 100%, that means you are manager of those funds. How does this work in comparison in the model where you invest or own less than 100%? How does that impact your decisional process?
Where we have 100%, indeed, we are the strategic investor, the GP. We nominate the board, we nominate the investment committee. So we are basically managing the fund. All investors which are investing into the fund, they are just considering that they are investing into O3's managed fund. Unlike to that model, when we have less than 100%, it's not by chance that we have only minority stake. So we are strategic minority investors, because in that case, when partners are co-GPs, they are managing the fund, and we are an investor who are providing services, helping them to make the fund management more efficient, but we don't intervene into the investment decisions. So in the model where we have only a partial stake, normally LP is also required that the funds are managed by the partners, by the individual shareholders of the asset manager. We make the fund management more efficient by providing support services, fund operations, IT, and helping the fundraising. But we have no influence on where they invest the money. We just select a good team of fund managers, as LPs are also selecting, trusting them that they are managing the funds properly, helping them to manage. But there is a kind of independent barrier process that fund investments are decided separately, and we have no influence on the fund investments.
Understood. Thank you. The next question would be, so the track record slide shows strong exits such as LogMeIn or SmartBill, but these were from funds raised a while ago. The TCE Fund 3 from 2013 is still only at 1.8 gross MOIC after 12 years. How representative are the highlighted successes mentioned earlier, and what can investors expect going forward?
Yeah, as I said, when we are investing into a fund manager, we are looking at the track record, but there is a capacity that we see that the fund managers will be able to manage successful funds. And of course, we also evaluate whether there were more difficult periods. For all fund managers, there are more difficult periods. By 3TS, the first fund was very successful. The second fund was still attractive, not 40% or over 40% IRR, but still a double-digit IRR. Third fund is still open, or it wasn't still closed, so we cannot really evaluate what will be the exit potential. Can still be attractive or not, but we really evaluated this fund 4, where of course we made a due diligence and we evaluated how the portfolio performs and what is the current return potential, and we see that the actual fund, the fund 4, which reflects the current performance of the fund manager, is still very attractive. It happens that if a fund manager managed already 4 funds, there is one which gave a bit less return than the others. But as the last fund is still performing pretty well, our valuation was that yes, it is still a very good team, and then they will be able to close all the funds successfully, and then being able to raise a new fund. As they are already a matured fund manager, they have a bigger number of funds, and out of that, it might have one which is closing at, I don't know, 2x, but the others were really performing well, and the current one is performing pretty well.
Got it. Thank you. In the meantime, there is another question. So, does any of the funds that are under management invest in early type of companies that are looking to do scientific research or deep tech type of projects, or do you generally look for more mature type of companies? The funds are looking for more mature type of companies that are probably or are more I don't know, susceptible to providing a return on onto the investors.
We have early stage and later stage funds as well. And then this is why that's a very well diversified type of portfolio. We have deep tech type of high return potential, higher risk investments as well in the portfolio, but that's not the only one. We try to balance that with general tech-enabled services type of investments as well. So you have both, and this is what I think, especially in this region, is a necessity to have a properly performing portfolio. So we differentiate by stages and by the nature of business and by the level of risk as well.
Got it. Cool. There is one last question that I'd like to address from the ones that I already prepared for the from the investors for today. This question would be, so this year you chose not to give dividends out from the company. Should the investors expect that in the next few years due to the fact that you are planning to expand, first of all, and also you are targeting Euronext Amsterdam as a target for 2027 or later on? Or is this just a particular case for this specific?
This is a particular case. We are growing quickly. We have just launched the crowdfunding, and we'll have the funding round in the IPO by the second half of the year, and we would like to close two new funds and then some potential acquisitions. This is why it's a unique case that we said it's better to use the profit for this really accelerated growth. As you've seen, our minimum ambition is to almost double the asset under management this year. We won't be able to double the asset under management every year, and we will have much better funding opportunities when we are already on the regulated standard market and we target Amsterdam Euronext. So my answer, of course, it depends always on the decision of the management and the shareholders, but my answer would be that my focus is that this is a unique case, and on a longer term, we would like to become and remain a dividend paying share.
Understood. Right. Thank you so much for the presentation, and thank you so much for diving into the questions that we've received from the audience. This looks like it is for today. I just wanted to give a reminder towards all the people in the audience or the individuals that are going to check this recording afterwards. If there are any further questions or you have any further curiosities, you can either address them towards the Sibling team, and we'll make sure that is redirected thoroughly towards the team of O3 partners, or you can use directly the discussion tab into the round page. You can find all the information that Peter presented today into the documents presented by O3 partners into the platform. So please feel free to take a look at them, and whenever there is the case, we are here to answer. And yeah, thank you again so much, Peter, for joining us today. Thank you, and I'm grateful, first of all, to be able to work together with you and your strong team on this front.
Yeah, thank you. Fortunately, I could still keep my voice alive, so hopefully everything could be well understood.
Amazing. Yeah, I can assure you that it was super clear. Cool. Thank you again, everyone, for attending today. It was a pleasure, and we are here for any further questions at any point in time. Thank you, guys.
Thank you. Bye bye.